systems are offline.
Number one for today's hits and all-time favorites.
Now, for the many South Africans who went from paycheck to no paycheck when the lockdown was implemented, corporates in the country stepped up in an effort to provide some relief. Insurance companies, internet service providers and telcos offered a range of benefits and discounts. Banks have offered up to 3-month payment holidays, which come to an end very soon. It may look like a welcome breather on the surface, but let's take a moment to think this through and carefully consider the implications. To help us navigate this issue, we are now joined on the line by Regan Mitchell, Managing Director of WealthyMe, a financial services provider. Regan, good morning and thank you for joining us on Africa Rise and Shine.
Good morning, Lulu, and thank you for having me, and thanks for sharing this platform. I'm excited to share with your listeners this morning.
That's great, Regan. Now, let's start with the 3-month payment holidays offered by banks for those struggling with bond installments. In simple terms, what will be the long-term implications for those who took up the offer?
Yeah, so many South Africans have exercise the option of taking a payment holiday on their bonds or on their vehicle finance or any other sort of credit obligation or contract. But what we need to understand as consumers is that there are long-term implications. So what happens in essence when you take up a payment holiday, you're just suspending your capital and interest payment of your installment for 3 months. So what then happens in the back end of the contract is the 3-month payment holiday that you exercise, or the option that you exercise, get refinanced over the remaining term of your bond or of your vehicle finance. So depending on the remaining term on your bond or your vehicle finance, your installment after the payment holiday is definitely going to increase, as well as paying additional interest on your contract over the term. So in essence, all that you're doing is you're deferring your payment, but it's no free lunch. As consumers, you are going to pay for it in extra interest. You are going to see an increase in your monthly installments after the payment holiday. So those are some of the implications if you've exercised that option.
Now, let's talk about how the COVID crisis is, easily pushing South Africans into the trap of loans, guised as efforts to soften the blow without exactly thinking hard about terms and conditions and, kind of understanding that a lot of people are under pressure and under a lot of stress.
So consumers need to understand that there are really no free lunches, Lulu. A lot of the help we're receiving is just a deferment of our obligations, and we need to still take responsibility for payment of these obligations sometime in the future. It is therefore important for consumers to understand the terms and conditions for the sake of proper planning as well as clarity. Consumers should ask questions and assess the long-term implications of these interventions because, like I said, there is definitely a cost to the consumer. It is, however, critically important for consumers to understand that COVID is not a death sentence. As the human race, we have and we will always rise up above a crisis. So this presents an opportunity for us to make the world a better place. So in essence, consumers just need to understand that there are terms and conditions to these loans, but we all have anxiety about the future, and that is something that we need to deal with. Is to understand that let's take stock of where we are and plan for the future and plan better for the future.
Planning for the future, taking stock of where you are. What other advice in terms of what people should consider before taking up loans do you have maybe? And, some arguing that they have no alternatives.
Lulu, yeah, that's true. It is human behavior to overreact to crisis situations. Consumers should really sit down and critically assess their financial circumstances as well as their available resources. So many of us should look at our balance sheets, go into Many of us may have access to tax-free savings. Many of us may be members of stokvel groups. As employees of companies, you might have access to your pension fund, and that's another discussion for another day. We also need to consider, the available resources made available by government in the form of UIF and that type of thing. So, in essence, if you really don't have an option, then take up whatever relief the banks and service providers are offering you. But looking ahead, we all need to assess our readiness and resilience to deal with future financial shocks. In the not-so-distant future, COVID-19 will be history, and we need to take the lessons learned and become better stewards of our financial resources and responsibilities. And this is where a company like WealthyMe can assist our consumers to plan better for the future, because now we need to look back and ask ourselves, that conversation that you had with your financial planner, where your financial planner asks you to set aside a specific amount every month towards an emergency fund, because you never know what the future holds. So it's critically important that now going forward, we plan better for the next emergency. We don't know what the next crisis is going to be, but what we know, and we know how the world and economies operate, is that it goes through growth and it goes through recession. And when we're in recession, we're always going to experience retrenchment and this type of things happening. But we as consumers need to make sure that we have a financial plan in place that will cater for these type of financial shocks.
Now, finally, Regan, the new development bank has approved a $1 billion loan to South Africa. Now, let's talk about the impact of government loans to taxpayers and how soon it will be felt.
Lulu, that's a big loan. I think in rand terms, that's about 17 billion rand. But the truth of the matter is that when a government makes a loan, they're making the loan on behalf of the people. And us, the people, ordinary working South Africans, will have to fit the bill. And at this point in time, South Africa is in a perfect storm when it comes to loans, when it comes to our debt to GDP ratio. So in essence, taxpayers will fit the bill at some point. And this is now when we as South Africans need to keep our administrators or politicians, we need to keep them accountable for the decisions that they make and for how they manage the finances, because all our lives depend on it at the end of the day.